Today, we're diving into one of the most talked about and honestly one of the most contradictory corporate stories out there right now, the Adani Group. You see, on one side, they're seen as this incredible nation-building giant, a real leader in green energy. But on the other side, they're a company that's been grappling with some really serious allegations that have shaken investor confidence to its core. So in this explainer, we're going to map out these two totally competing narratives to try and understand the full picture. We'll look at the paradox at the heart of the company, the just sheer scale of their ambition, the crisis that absolutely erupted, how they're dealing with the fallout, and, of course, what the future might hold.
Okay, let's get right into this central conflict because it really defines everything about the Adani Group at this moment. It's almost like you're reading two completely different books about the same exact company running at the same time.
So on one hand, you've got this celebrated engine of growth, right? They're all in on green energy, building massive critical infrastructure projects. But then you flip the coin and you've got a corporation that was just rocked by these serious allegations, leading to intense scrutiny and, some major reputational damage. The fact that both of these things are true at the same time is what makes this story so fascinating. First up, let's explore what you might call the bull case for Adani. This is the story built on a foundation of truly colossal, mind-bogglingly huge projects. This is the narrative that gets investors and governments really excited.
And this, right here, this is the perfect illustration of their ambition. This is the world's largest renewable energy park. It's not just a solar farm. It's this sprawling, massive testament to their vision for a green future. It's a statement piece.
And, this isn't just about one park. Their goal is to hit 50 gigawatts of renewable capacity by 2030. That's a figure that would make them one of the world's absolute top players in renewable energy. This huge target is really what underpins their entire growth strategy. And look, they're not just building power plants. What they're doing, which is really smart, is building out the entire ecosystem. We're talking generation, storage, and transmission. They're buying up transmission lines to move the power, building enormous battery projects to store it for when the sun isn't shining, and grabbing vast amounts of land for what's next. It's a complete end-to-end strategy. Now, all this ambition is backed by some pretty strong financial performance. If you look at their power division's recent results, you'll see profits and revenue are up, while key costs like fuel are actually going down. That kind of financial stability is absolutely crucial if you're going to fund plans this big. And speaking of funding, to keep this growth engine roaring, the company is out there aggressively raising capital. They're using things like qualified institutional placements and non-convertible debentures, which are basically bonds, to bring in cash. This doesn't just show their own confidence, it shows the market is still willing to back their very ambitious future. All right, so that's the shiny, optimistic side of the story. Now we have to pivot and talk about the crisis that absolutely rocked the conglomerate, just as its stars seem to be rising uncontrollably. This is the other side of the Adani coin. But before we get into the nitty-gritty, it's really important we're all on the same page about what a short seller report actually is. This isn't some neutral academic paper. It's published by an entity, in this case, Hindenburg Research, that has a direct financial incentive, a bet that the company's stock price is going to fall. So, the report from Hindenburg, it leveled some incredibly serious allegations. We're talking claims of financial irregularities, of inflating their spending, of questionable deals with related companies. It all painted a picture of some major corporate governance issues, which critics would argue might have been the very engine for their crazy fast growth. And here's the crucial point. This wasn't just a financial problem. It was a massive, massive blow to their credibility. The report created this crisis of confidence that just wiped out billions in market value and put the entire organization under a global microscope.
So, how does a company respond to a corporate storm of this magnitude? Let's take a look at how the Adani Group has been trying to navigate the aftermath and all the intense scrutiny that came with it.
A really big development came not too long ago when a senior executive, Pranav Adani, was actually cleared of insider trading charges by India's market regulator, SEBI. For the group, this was a huge legal and reputational win. Now, the regulator's reasoning here is pretty fascinating. SEBI's order basically said that detailed media reports had already made all this information public before any of the alleged leaks even happened. So it couldn't be considered secret, price-sensitive information. That's a really key detail in this whole saga. And despite all of the controversy, key indicators are showing that market confidence seems, well, surprisingly resilient. For example, Adani Power's stock price jumped 5% after their latest earnings report. And if you zoom out, the stock has delivered a massive 110% return over 2 years. That suggests a lot of investors are still betting on that growth story.
And remember that massive capital injection we mentioned earlier? 16,000 crore? That's a powerful signal that many big institutional investors still believe in the company's long-term story. You know what they say, money talks. And this level of funding is a pretty significant vote of confidence.
Okay, so let's try and bring these two narratives together to figure out what it all means for the future. I mean, how does a company this ambitious even operate when it's also under such intense, constant scrutiny? Well, looking ahead, their strategy seems to involve a pretty calculated shift. The plan is to sell about a quarter of their power on the open market to try and capitalize on higher prices while keeping the vast majority, 75%, locked into stable, long-term contracts. It's a really pragmatic way to balance risk with potential reward. And this brings us right back to the central paradox we started with. You've got a company that is simultaneously reaching for the sky while standing directly under a microscope. Their every single move, from fundraising to project execution, is going to be watched and analyzed by everyone. And so that leaves us with the ultimate question. This isn't just about stock prices or profits anymore. It's about whether this corporate giant can actually fulfill its massive potential, while also doing the hard work of proving to the world that its foundation is as solid as its ambition. The answer to that is going to shape not just a company, but a pretty significant piece of a nation's future.